Well, welcome back, everyone. It was a start to the week that we anticipated through the power of our toolkits. Let's go take a look at the market as it went into the end of the day today. You can see a very long-term chart of the S&P 500, the market, on screen right now, going back to October of 2022, the bottom of the market, and we put a channel on it that helps us statistically identify what we're likely to do next, and that would be we are very far away from normal up there in the top right-hand side of the screen, and more likely to pull back to the mean or revert to the mean. Now let's take a detailed look at the SPY here, zooming in at the hard right edge. There's that mean reversion center of the channel. That's 2 standard deviations above the center of the channel, and that's 1 standard deviation above. Now you'll note that I've also got a channel on the behavior from the latter part of May all the way to today. And you can see that we have broken that little mini channel. We've opened the door effectively underneath a key structure, the pivots for the week-on-week basis have a center of range, and that acts as a significant resistance area. Well, we came up to it. We actually perforated it for a little bit, but we closed back down with a bearish reversal, and we closed underneath a key support. Now, I don't think that we're just going to unravel from here. However, the potential to come down and test that pink line right in over here, which also happens to be where the weekly pivot range bottom is, and that's in the $537 area. So my expectation for this week in videos just like these was a market that's very far away from normal can become very fragile, especially if it's just fewer and fewer issues taking us up. And this week is all about Fed speak. We've got Fed member after Fed member speaking. Are they going to really come out and blow more hot air into the market, or do they have a better chance of tamping it down? It's expected that they would tamp it down, so likely the market is waiting to hear a mistake, something that gives one a clue that they may actually be coming to the rescue for the consumer sooner than later, and that means there's a problem with growth, and there's some fear to be had potentially in the area of, wow, consumption can get a lot slower, and that's why they're kind of hinting at that. But these are all things that are conjecture. Is that big red candle at the hard right edge of the screen driven primarily by the things that I know, we both know are key negatives that are unwinding? So NVIDIA, you can see over here very clearly, down 7.25%. And if we kind of expand that out and take a look at where the month is, it's effectively now on the month of June, nowhere close to where it was earlier, but still in positive territory, as we can see. Now, let's take this and kind of get an estimate of what the technicals, in a very high-powered, straightforward manner, tell us about the next move. Now, I'm giving you a view based on just general pattern. It's very similar to this type of a situation that I'm looking at as the next move, but it could be deeper or it could be delayed. So I'm going to pull up a set of charts for the SPY using a suite of technical tools that you see us pull up here on a regular basis. This is the SPY on a weekly chart basis, daily in the center, and then a 4-hour. The weekly looks out a quarter, sometimes more. The daily looks out couple of weeks, sometimes up to a month. The 4-hour chart typically looks out 3 to 5 days. Now, when I say looks out, it casts a signal that has bearing on that time of the time frames I've mentioned respectively. When we look at the weekly chart, the real issue that one would see here is we're slowing down in bullish momentum, which, by the way, is what happened right there, and we continued up. It happened right there. You can see it on the left-hand side of your screen, and we had a pullback to refresh before going. Now, you'll see that that pullback started with the triple S indicator in the uppermost quadrant, meaning the pause to refresh required a deeper pullback. We see that from the ITP fast trigger as well. Okay, it was in a very elevated spot. Now, we've made higher highs, and both the triple S line and the fast trigger have made lower highs. This negative divergence is a concern. It's amplified when you look at it on a daily chart basis, where we've got the daily chart already under the speed lines, and effectively in a spot where we've had the negative speed line crossover. And when you look at the tools on screen, which is the Champion Trend Pack toolkit that comes with your ultimate WealthCharts membership, and some marketplace toolkits like Rob's ITP, TRP, and my Triple S are applied there. When you look at the entire symphony together, what you see here is a stretched market that has gone through the 3 stages of the Champion Trend Pack Toolkit. Stage 1, Champion Trend, Champion Cross. Stage 2, Wealth Signal, or if it's a resumption of a trend, a range breaker, or even breakout forecasters. And effectively, it's over when we've got an absence of breakout forecasters for at least 3 bars, or at least 2 bars and a speedline crossover, which is what is in place right here. Now, this comes as well with the Spike 2.0 tool telling us that we've got a partial retrace back up, still likely. But the down is not done according to the 4-hour chart that really is casting its signal closer to now and telling us that we've got some downside risk that could take the SPY down to a target 1 from the TRP toolkit, 536-ish area, the midline target, the 533-ish area, or the target 2, 529-ish area. Once that hot air is out, the expectation would be for a bounce up. Now that, of course, would have to be evaluated. Caution is to be at hand. Assuming that we just unravel is not the likeliest outcome, a little dead cat bounce before another round down triggered by Fed speak would be a fair way to look at the next day in markets. We also have consumer confidence on the U.S. side coming out tomorrow, and that's at 10 a.m. Eastern time. Something to be very wary of, as well as a potential negative at the start. If it's very bad confidence, well, guess what happens then? The assumption from the machines is that it will be rewarded with Fed support. Yet to be seen. I hope that you enjoyed this video and are moving into the summer with an open mind and a tactical advantage using insights from videos just like these. We'll see you in the next one, and thank you for watching. Bye for now.